Oh my. Walmart sinks as Bitcoin squeezes, with bond yields going absolutely crazy because of the war in Iran. Leading into next week, we're also going to be looking at Nvidia earnings coming out on the 26th, and on the same day, we're going to be looking at mortgage data telling us about the health of the housing market. So let's talk about it. When the initial numbers came in, Walmart's earnings looked absolutely amazing, with beats and raises across the board. However, two red flags emerged. Their operating income, rising 28.8% within this quarter, was largely not because of improvements to the business itself, but rather to the $2.9 billion refund that they got from the tariffs. Strip out the tariff money, and their 28% really looks more like 8%. And the second red flag was gas prices, rising to a point that it cost the company another $2 billion in direct logistics costs, and not to mention it caused psychological damage to their consumers, causing same-store sales growth in person to drop from 3% to 1.5%. But higher gas prices aren't just fucking over Walmart, they're also fucking over the US government. Under the Trump administration, bond yields have risen to their highest levels since 2008, and with an almost $2 trillion deficit, we're almost guaranteed gonna have to borrow more money, and that money is more expensive to borrow because of these higher yields. To fight back against this, the US Treasury says that they're going to start buying back some of their old debt. It's something they previously were doing, but now they're going to step up the operations even more, from $2 billion to $4 billion every single day. This artificial demand that the US Treasury is trying to create should, in theory, make bond yields go down and therefore make borrowing less expensive. And if yields are getting lower, then that means that the return on that investment is not as attractive as it once was, meaning that more investors are going to get a little riskier, as if they're not already, but they're going to try and get even more riskier and then push more money into stocks and crypto, baby. Crypto, let's go. Bitcoin obviously wasn't the only beneficiary from this news. You can see it across the stock market with many things rallying, but historically, when this has occurred, when there's more money in the system, people do stupid shit, and so Bitcoin rallied from 65 to currently 78 as of the time of this recording. There's also elements of a short squeeze, because of course there was. This is dumb. 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 Then again, you know, I didn't make money from it. So Nvidia reports next week, and for the past 4 quarters, they've destroyed earnings, and for the past 4 quarters, they have absolutely been destroyed after earnings. Don't expect for this pattern to go away, as Chinese models continue to be released every single day, showing that they could do similar things for a whole lot less with a lot less. So the conversation this quarter is definitely going to be about their Rubin architecture chips, and we're really trying to see is how is the transition actually occurring. As I said before, Chinese models are able to hit similar metrics with worse technology than what the Western companies are able to do currently. If this is the case, does Nvidia even maybe need to cut the price of these chips in order to stimulate revenue? At this point, we're just going to have to wait and see. And on the same day, we're going to get a lot of information about the housing market. With mortgages averaging at about 6.6% and housing at record levels, owning a home is just, it's just not. You know. The reality is that we're not going to see 3 to 4% mortgages anytime soon. So we're just trying to approximate how much of the average income is being eaten away by housing payments. If home owning, which is typically the highest expense of anybody's monthly budget, continues to get more and more expensive, we could see that bleed into consumer discretionary spending, like what we saw with Walmart. And there's a couple more things I could get into. If you want, message me about it, but that's all I got for today. Thank you very much. Subscribe and that, like. Bye-bye.